My name is Simon Hunt. I live in Dubai, and Jan has asked me to talk about the situation that I see here in the city and in the region, and the consequences for financial markets, gold, and other precious metals, and copper. At the moment, life goes on normally here. Dubai is an empty city. So many people have left. There are very few visitors. In the hotel where I live, to give one example, there are 750 rooms, of which 225 are long-term lessees like myself, and there are only 75 visitors in the whole hotel. And that is a good example of many of the other hotels around the city. We do get notices when a missile is approaching. Our iPhones light up with loud pings, and when the missile has either been shot down or has finished wherever it's going, there's a ping to say all clear. My concern here for the region really stems from the assassination of Iran's supreme leader during Ramadan, and with members of his family and senior advisors. Because in Shiite theology, this has a very big, very large significance. For instance, soon after the assassination, all the mosques in Iran flew black flags, signifying a jihad. So we can expect in other countries here, particularly with large Shiite populations, for there to be serious civil unrest. The bigger issue is that Iran on the one side and America and Israel on the other are pretty intransigent. Iran, because it sees now is the time to become a truly independent sovereign state, not threatened by sanctions, tariffs, or war. The Iranian leadership sees this is the time to stand up against both Israel and America. And on the other side, Israel and America, for separate reasons, want to see Iran destroyed. Israel, because Iran is a threat to its own security, and because Iran is an obstacle in the pursuit of greater Israel. For America, Iran is seen as the weak link in the BRICS group of nations. Therefore, if Iran can either be destroyed, a leadership changed, and the country split up into smaller parts, then that would be a huge move in weakening the growing influence of BRICS. However, on the 29th of January, a tripartite agreement was signed between Iran, China, and Russia. And that really signifies that if one is pressurized, the other two will come to their assistance if needed. That assistance has already been given by providing Iran with both Russia and China's most up-to-date satellite radar surveillance systems, which in effect can detect oncoming ships, planes, or forces from as far away as 750 kilometers. China and Russia have also provided Iran with latest military equipment. So what happens over the coming months, or I should say the first thing we should understand, because it has not been the case so far, is that this war will not be a short one. It's going to be a long one and will move in waves of intensity. what should be worryingly for the West is that Israel, and I'm not sure whether Israel was joined by America, but they have hit an oil installation in Iran. If America stroke Israel goes down this road to destroy or try to destroy Iran's oil installations or ability to ship oil, then there will be retaliation by Iran. Firstly, Iran has already mined the Straits of Hormuz and can easily explode those mines and thus shut the straits down, not for weeks, but for months. And should Israel stroke America continue to attack Iran's oil installations, then as a final resort, Iran will retaliate by firing hypersonic missiles at the oil fields in the Persian Gulf. That is the last resort. But, as I said before, it all depends on America's attitude. The implications for the world, in simple terms, are going to be very clear. Oil prices will remain high. Financial markets will be disrupted. Inflation will rise. Bond yields will rise and not fall, particularly at the long end. And that in turn will impact what has driven the American economy so far, data centers. In this turmoil, how deep equity markets will fall again comes back to whether America continues to attack Iran. But what one can be sure about is that gold and silver prices will continue rising to at least doubling in price by the end of next year. For copper, because copper is basically an industrial metal and its industrial production will decline, as well as we will see disruptions in supply chains, then we are going to see copper prices falling from the 12-odd thousand level to significantly lower. But one thing we can be assured about is that America's Federal Reserve and Treasury, followed by other G7 countries, will flood their systems with liquidity. And that will lead to the next big decline in the US dollar, and therefore base metal prices like copper will more than double from the lows that we will see later this year. The reason being is that not only will financial institutions be seeking their hedges against rising inflation and a falling dollar, but manufacturing industry will be doing likewise. And that has always been the case, which has preceded very sharp rises in copper prices. Thank you very much for listening to me.